luxury real estate, at least in New York City, the stock market might be having even more of an impact. Robert Frank joins me now to explain. Robert?
Hey, John. Well, in Manhattan and the rest of the country, it is the top of the real estate market that is seeing the biggest drops. Sales falling 18% in Manhattan in the third quarter. Prices are still rising, with the average apartment now at just under $2 million. But of course, prices do lag sales. And when you look ahead, it's the high end right now that is getting hit the hardest. Signed contracts in September for apartments priced at $4 million or more fell by 50%. Eight-figure apartments that had been selling quickly, well, they're now sitting on the market a lot longer. The supply of luxury apartments up 29% in the quarter. Discounts are now highest for apartments priced at $10 million or more. Now, brokers say sales are simply returning to normal levels, and Manhattan is less sensitive to mortgage rates since half the deals in Manhattan are done in cash. But falling stocks, weak Wall Street bonuses, office vacancies, and the city's impending financial crunch could continue to reduce demand. Now, when you look nationally, sales of luxury homes fell 28% in the quarter. That is the biggest decline, John, since 2012. So right now, unlike the consumer economy, the biggest weakness is at the top of the real estate market.
And I wonder, Robert, I imagine luxury real estate is a global market. So how much of an impact does a relatively strong dollar have when probably there are relative bargains to be had in, attractive cities in other countries?
That's true. We do hear a lot of Americans going to the UK and Europe because it's attractive there. On the flip side, as you point out, all of the traditional overseas buyers, where you're talking about the Chinese buyers, the European buyers, Latin American buyers, it is a lot more expensive for them to buy, not just because of higher mortgage rates, but because that currency swing is now meaningful, especially when you look at the euro or the pound.
Now, if the rich are still spending in the real estate market or in the consumer market in general, but not as much in the real estate market, is real estate a leading indicator?
It's a paradox. On the consumer side, we've talked a lot on air about the high end is the strongest. In real estate, it's the opposite. And I think, we're still seeing strength in arts and collectibles. And I think the wealthy see real estate not as a form of shelter, but as an interest rate sensitive investment. And just like all interest rate sensitive investments right now, they see a decline up ahead.
Robert, thank you. Robert Frank.